Good morning, everyone. Let's see here. Good morning, good morning. Happy Monday. Welcome to tradingsyndicate.org. Hey, Raj, Ian, how you guys doing? Hopefully, our friends stateside have power. Oh, you got another holiday week. That's great. Hey, Jerry, what's up? Good to see you. Oh, hey, Juan. ¿Qué pasa, hermano? Welcome to the folks on YouTube. Joining us, I'm JJ. This is the tradingsyndicate.org, and I'm vwaptrader1 on X. On this slow morning, I in my weekend update video, I said watch out for a gap down because um, everyone was just really worried about U.S. shutdown and tariffs on Canada and all that stuff. So we did gap down, right? Hey, Moran, we did gap down. So there's Friday's low. We gapped down and we opened somewhere here. And I told you guys to look for certain levels. And then we gapped, and immediately, you guys going to try and put it in simple, plain English. When you have a gap down, it's like having a sale, okay? It's like having a Black Friday sale. So we opened down here, right? We opened at 69.04, all right? And immediately went lower. And when that happens, it's like having a fire sale, right? Or a Black Friday sale. And there were certain areas where I was watching where there would be bids, and we came right back up and we bid this 6900 area. That's where that low is. And then right here at that 6908, 6910, immediately overnight inventory corrected. It corrected quickly, right? And you'll see that on the 1 minute chart. You'll see that gap down, and then you'll see the move right back up. And I'll show you on the minute charts. So a lot of people like to short a gap, right? When a market gaps down, it's like those Roadrunner and Coyote videos, cartoons, where the coyote just chases the Roadrunner off a cliff. And that's exactly what happens to short sellers. They short the crap out of the lows because what happens is the market opens, the auction opens, and it gaps down, but they don't give it time. If they had given it at least a half an hour, they would see that the bid is moved up from the low of 68.79 all the way up to 6900. So in a half an hour, if that bid moves up that high, right? If it moves up 20 points in a half an hour, and if you don't know what a bid is, it's what old guys like me call support, right? Support is created by unfilled buy orders, just so you guys know, right? That's what creates support. So what happens is a market will bid, and then those short sellers come in and cover. When they come in and cover, the wholesale longs start building positions on top of them. And then they distribute, and this is short covering, and then this is short covering. So the more people who short this move, the more people have to cover. And right now, we're back into the cost basis of Thursday and Friday. So there's going to be a little resistance here. It looks like we've got a poor high in the overnight, and trading is kind of slowed down. But this is what they call a P profile. If you go like that, it's shaped like the letter P, right? Now, market profile, it's interesting. There's only a few things that you really need to know. You know, the shape of the profiles, a B profile is liquidation into wholesale hands, a P profile is short covering, and the shorts are trapped at the bottom of this P and right here in those single prints, right? This is short covering, so we'll see when London opens if we can crack that. We're back inside Friday's range, so there's really no huge change in business, right? The sale brought in buyers. Does that make sense to you guys? Right? So we had a sale. Right? The market opened here, 69.03 and change, right? 69.04, right? And look at the volume on the way down. There was not much for sale, right? Not much at all, right? We didn't, and I was telling you guys, this is on the 21st. This is the cool thing about market profile. If you use it in a practical matter. Now, I know there's a lot of people who are putting out courses on profile and stuff like that, but you can't really trade off market profile. You use it as a map of the city, and then when you want to trade, you zone in like a microscope and you switch the lens and you zoom in to the map of the neighborhood that you want to navigate, right? Hey, Dave, how you doing? So I said the day before, right, or actually before this move up, on the 21st, when that J period opened and liquidated down here, it caught a bunch of people short. And when it took out the high of that I period, that's where the big short positions under 72. So as soon as we came down to that 79, 72 area, a whole bunch of buyers came in. The sellers saw the buyers through the glass door and they raised price. And the buyers chased the market all the way back up. And then the buyers were lining up at 6,900 and underneath. So why would you sell underneath if people are willing to pay more? You raise price. Then when S period took the high of R, boom, short position, trapped. So on any kind of retracement, my friends, the bottom of these half-hour candles, which is all market profile is, it's a half-hour candle chart that is a little bit more fancy, so you can see a little bit more, right? You don't have to go into the depths of market profile because all that's going to do is confuse you and it's going to screw up your trading, right? People take years to figure it out. You don't need to do that. There's just a few concepts that you need to make money, right? And one is to know where the inventory is, and one to know where the shorts are trapped and where the longs are trapped. Because it's your job to do a business in between, right? So right now we have a poor high, which means we have selling competition at 69.40. That makes sense because all of the inventory over the previous 2 days are up here. So this is what we call overhanging supply, right? You guys call that resistance. Resistance is created by supply that is priced at higher levels. And when you get into that level, right, the sellers are only going to raise price if they see enough buying. What happened here is once we got inside Friday's rage, a lot of people shorted it, and now we've made a move higher because the problem with these markets is if you hold price steady, it attracts buyers. And that's exactly what happened. There's that gap down. There's the gap fill. So Let's see what happens. We're complete distribution over VWAP. My balance zone is 69.25 quarter to 31 quarter. And double it up to 43. And then double it again if we get there, right? So now we're set up. We're ready to trade. All we need now is to wait for our setup, right? The setups I like are where the market does this, does a look below and fail of an edge, right? You can see that there was a seller there. Those sellers saw buyers, right? Or a look above and fail, right? I like trading from the outside edge in so you know that's where you're going to get the best prices, right? You always want to get the best prices. You don't want to pay, if a watch is $20,000, you don't want to pay 21 and try and sell it for 26, right? That's only in certain markets that you could do that, right? You want to get the lowest price you can, and then of course turn that inventory back into cash. You don't want to sit with inventory tying up your capital too long, especially when you're a new trader. When you're, when you're trading more money and you have some skill and some experience, sure, then you can hold inventory a little longer. The analogy is just like, say you're a billionaire and there's a real estate crash. Well, then you can buy 20 or 30 houses, right, at a deep discount and sit on them for like 10 years, right? Whereas if you're a flipper, which what we are, we're flippers because we don't have the capital to go deep long, right? You'll get there eventually, but you can make good money flipping, right? If you can make 3 to 5 points on 5 to 10 contracts, you could, you can pay your bills. I mean, as long as you're not looking to get a jet card. See how the bid's creeping up, right? So we're having this slow creep higher. I hope the folks in the States don't, I hope they have power. So you guys got a lot of snow. That's something that you're not used to, eh, Dave? You got killer snakes, kangaroos, spiders, but you got no snow. Oh, and crocodiles. I forgot the crocodiles. Does it really? Oh, cool. I do not miss shoveling snow. Actually, bears aren't that bad, Ian. When I lived in when I lived up in the mountains of West Vancouver, I had a family of black bears in my backyard. I tell you, as a security system, you can't get better than a 400-pound black bear. You just give that guy a few apples, and he makes sure nobody breaks into the house. Yeah, they were pretty cool. He, I could actually, he would take an apple out of my hand. Anyway, probably not a good thing to feed them, but hey, better make friends than enemies, right? See, look at this. This is the worst kind of price action, folks, to short. Because everybody wants to short this. But do you see how it's kind of slowly creeping higher? When I worked at the nightclub when I was a bouncer, this was like the guy who you never thought would make it up the stairs. You know, he had had a few many tequilas, you know, and he's like, you know, he stumbles and he stumbles and but he makes it up the stairs, and that's that slow price action that is electronically driven in today's markets, where shorting this is really hard. You got to wait for the backside of the move, and when you do short it, you got to cover quick. Now this week, oh good grief, what do we have for earnings here? Where is it? Where is it? Where is it? Tuesday we have American Airlines, Boeing, General Motors, UPS. Wednesday, Starbucks, AT&T. Wednesday after the close, Micro Squish, Meta, and Tesla. Thursday before the open, MasterCard and Nokia. And then Thursday after the close, Apple, Crab Apple, SanDisk, and Visa. So, and we have a Fed meeting, right? Wednesday's the Fed. So it's going to be like walking through some landmines. It's going to be a difficult trading week, okay? Yeah, it's going to be a slow week. Sometimes the price action is going to be crappy, right? So you're going to have to trade smart. You're going to have to be smarter in your trades, right? There's a couple of ways to deal with this kind of market. Number one is to build positions. If you aren't used to building positions, I would highly suggest that you start learning how to do so, because I think this year is going to be a lot of, you got to build a little position, put in your risk, and sell into strength, right? Same here. Build a little position, sell into strength, and manage your risk. That kind of trade, I did a video on it. It's posted in the room. Our room is tradingsyndicate.org. I would invite folks to join us if you want to learn how to do this business, make a living without all the mumbo jumbo and all that stuff. Do I offer lifetime guidance? Yes, I do. I have a lifetime membership, lifetime mentoring program, and I just had this horrible story. This kid was just going to sign up with me for lifetime mentoring, and he got sick, and I wish him the best. Really feel bad. So I've got spots open. Um, I have a lifetime mentoring program. You work with me every day, and that way you don't, no matter what it takes to get you profitable, I'll do it. It doesn't matter how much time it takes either. So yeah, I'm not really sure how to pronounce your name. It's Neela. Reach out to me, vwaptrader1 on Twitter, or if you're in our room, just DM me. So yeah, I do have spots available. Now we got a little backfill going here. I'll put my yeah, you could just DM me anytime. You know, and we basically, what we do is we get you a good understanding of the market, and then what trades do you take, what trades do you not take. It's really hard for a lot of people to understand when they shouldn't be trading, because when you look at a chart and you don't know what's creating the chart, it's really hard to do business, right? It's like, you know, it's like saying, I'm going to make you a diamond merchant, and you know nothing about diamonds. So how are you going to make any money, right? So that's what we try and do. We try and teach you, and we try and teach you in with common sense. So there's no mumbo jumbo. There's no technical patterns. There's none of that. It's like, how do I make money? Where are the buyers? Where are the sellers? What kind of business can I do? And more, most important is, how do I make sure I don't lose money? The overnight move made a lot of sense. No problem. We are the overnight move doesn't make sense to people who don't understand the business, and that's what I try and teach you guys. You see, when you have a market that moved up on that short last week, the president said, "Okay, I'm going to do this." Everybody got short. We dipped down to 68.24, and then he said, "Oh," the next day he said, "Oh, just kidding." Just kidding. So everyone who's short under here, when the market dropped down on that gap, they all came in to cover. You know, like when you watch those videos of people going into a Walmart sale, right? On the Black Friday, and they're pushing up against that door and the poor security guards holding them. That's exactly what happened. We had a fire sale and all the early birds caught the cheap supply, right? Yeah, you come with me, Neela, you'll never blow up another account again. Uh, you know, it's just, we do not blow up accounts, right? You get stopped out, you're wrong. Of course, you're always going to be wrong in trading, but you'll never blow up an account ever again with the way I teach. I have never blown up an account. I've been doing this business for 34 years, and I've taken 200 companies public. I've traded out billions of dollars worth of stock for the investors, the insiders who run these companies and invest. So I understand market mechanics, and my job now is to protect retail traders from losing their money, because it sickens me to see people lose money. It makes me physically ill. Uh, you are going to get stopped out. You will make bad decisions. Everybody does, right? We all go through the spanking machine, but there's no reason to go through the spanking machine multiple times, blow up multiple accounts. The problem in retail trading is retail traders are not used to making money. So I train them how to make money where they make a little bit. And once you start making money, you don't want to give that up, right? So you get used to it. So you're not going to take bad trades, right? You're not going to take bad trades. There was somebody last night said, "Oh yeah, I'm just playing with house money now." That kind of stuff is how you lose money. There is no such thing as house money, right? There are earnings that you make when you're trading, and then if you lose those earnings, that's just bad business decisions. There's no such thing as house money. You're not in Vegas, right? This is a business, right? So if you make $100, why give it back? If you make $200, why give it back? Would you go to work? It's like taking your paycheck from work and burning it, right? There's no such thing as house money in trading, right? That's really, really bad, undisciplined business, right? So once you make money, you got to take that money and steal it away and put it away, right? Our traders take money out every week, every 2 weeks, so they don't get tempted to size up, to do stupid things, to play with money that they think is house money. The money's not yours until it's in your bank account. No matter what you say, how big your account is, until that money is in your bank account, it's not yours. I don't care what anybody says, right? I'm talking retail. Now, if you're an institutional trader and you've got 200 million assets under management, obviously you know what you're doing, I would hope. But they get trapped too, right? Everybody gets trapped. Everybody makes bad business decisions. Bad things happen in markets, and You have to be able to manage that risk, right? So when you take a trade, you're like, okay, if this doesn't work out, where's my exit? You know, when you get on a plane, they go, okay, the exits are here, here, and here, right? When you get into a trade, like say you were short, you know, say you had shorted here. If you were short in this area, well, your exit would be the top there, because if those sellers lift, that means they're raising prices. Why do you want to be shorting and why do you want to be short into a market where the wholesalers are raising price? Right? You're selling something you don't own in an area where the people who own it want to sell it at higher prices. Makes no sense at all. Right? Simple, common sense. And it's lacking in trading education, and that's what we try and do. All right, let's go tickle this 69.43, and we'll see what's lurking up here. Let's see if we can find a seller here. That point of control, which is what we call a cost basis. Market profile people call this the point of control. That's where 70% of the volume has traded. That means that is where 70% of your inventory is priced, right? Because it's a market. So when we get up to this 45 level and that stop at 46 and a quarter, there should be a seller here. If there's no seller at this level, it means the sellers who own product here go, holy crap, they're willing to pay more and they're going to raise price. That's how you watch a market, right? You watch to see if the offer moves over 43 and prints. If it does, that means people are willing to pay 44, 45. Right? So our cost basis is here. This is how much we paid for the cookies, right? The cookies are priced here. We're selling them at cost basis times 2. This is a profit zone. This is 4 times what we paid. Okay? That way, I draw these zones every morning so we could see if we're paying too much or if we could get a discount. Everybody wants to get a good deal, right? Nobody wants to pay retail. And our trades are based on these things. Our trades are based on common sense, practical business. You can see that there's a seller at 42. Do you see that? Now, are they aggressive? So say, for example, you were Johnny on the spot and you shorted 42, or you're short 41 and a half, right? You were quick, right? Say you're short right here. That's okay, right? Say you're short. Your stop's going to be 43 and a quarter. Does that make sense? Why was your stop going to be 43 and a quarter? Because if the market lifts price over 43 and a quarter and goes 44, 45, you're selling inventory that you don't own. Try to buy it back cheaper and everybody's moving the price up. So say you're short here, what's your next move? Well, put some bids in. Say you're short 41 and a half, 42. Go put in a bid here at 40. Right? If that bid cannot get executed when London opens, then you know that they don't have to sell under 40. Make sense? So when you take a short position, say you're short here, your stop is here, you put your buy orders down, you don't have to move your stops then. If those buy orders don't get executed, the market's telling you, wake up, there's no supply, right? Don't get high on your own supply, right? Double top, sellers are still competing. So London opened, it went down 1 tick. So as soon as London opened and it went down here, and it went down underneath 69.41, there were unfilled buy orders there, and the wholesalers lifted price. Let's see if we take out that double top. A lot of people will short a double top automatically. Your stop will still be 43, 44, right? And go put bids in if you are short. If those bids do not get filled, That means the market doesn't have to sell cheaper. If they get filled, you could stay short. If they don't get filled, you know what to do, right? Just like when you're long and you put sell orders out, if those sell orders don't get executed, you got to lower your price of your inventory, right? Now, what happens if it's choppy like this? Right? If it's crappy and choppy like this, I wouldn't trade. Right? The smaller the candles, the worse the business is for us retail traders. Because we need follow through, right? When it's choppy, the opportunity is limited, right? That is a wholesale business, right? There are times when wholesalers make money, and then there are times where the market allows us to make money. So when I see a double top like this and I don't see an immediate sell-off, I know the market is bid at 69.40. So I'm just going to watch and see because it's Monday morning and I haven't taken a trade yet. And this is the first time in 2 weeks we have dingles. That's good, Brad. Singles, yes, we do. We have singles. We have 2 sets of singles now. Thank you for showing me that. So we got a set of single prints here. We got shorts trapped here, right? And we got shorts trapped all the way down here. So these are the obvious short positions, right? And then you'll see not so obvious short positions like here, right? So what's happening here, right? What's happening here is distribution, right? You know that the shorts are trapped here and you're leveraging them so you can sell what you bought here and here up here. That's a wholesale business. You'll notice they'll come down underneath 41 and then the price will pop up. Now the overnight point of control, meaning this is where 70% of our inventory is priced here, 69.26 to 30, we're going to try and sell that up here. And that's called distribution, my friends. If distribution is unsuccessful, we'll put it on sale. And we'll fill these single prints, and their target will be 36, which is right this area here. What's the news today? News. Durable goods ordered at 8:30. Durable goods minus transportation. Tomorrow's consumer confidence. Wednesday's FOMC. And of course, it's month end, right? So, last trading day of the month is Friday, so which means month end is Thursday, and we've got all this news cycle. See how the offer is moving above the overnight high? Whoops, sorry. See it printed? So it printed 43, 43 quarter, 43 half. Right? So the market has seen buyers and they're raising price because that's what you're going to do, right? Is there usually much strength in untested POCs? It's hard to know what's going on there until we go punch it with some order flow in. I'm always curious about it, but it's not a trading strategy. Right? When the market comes down to an untested cost basis, right, or an untested point of control, there might be a long there if it fits in your trade setup. Once again, I don't use market profile to trade. It kind of gives us some sort of idea where the inventory is priced, right? So you use that in coordination with your 1 minute chart. And when we do our one-on-one later today, we'll go through that. That's a really good question. That's a really good question. The hard thing in trading is there's just not one thing we got to look at. We got to look at multiple things and kind of put it together. It's like cooking a complex dish, right? It's a little bit, there's a little bit of subtlety, and that's the hardest thing. And it's never the same, right? It's never the same. The patterns will repeat themselves, but there'll always be these subtle little differences, you know? And that's what we try and keep track of, those subtle little differences. See how it's creeping up on that 45 level right there? What I'm curious is it's interesting because I'm looking at this area. How many people got short here? Looking for, because a lot of people, when a market fills a gap, they'll short the crap out of it. So I think a lot of people are short from 26 to 30, 26 to 32, because that's why we're doing another market profile term they use is one time framing, which means trend up. The lows are moving up. So when the lows are moving up, the buyers are following the sellers higher, right? Now let's see if we get back up underneath 43. This is a tough market for short sellers. You know, every time we have a sell-off, it's met with a lot of buying because a lot of people don't understand that there are other people who are short at lower prices who are longer time frame traders, and they come in and cover and give support, and it frustrates the hell out of people because they think they always go with this, oh, the price is too high, or it's got to come down, or now with electronic trading, oh my God, the price is, it's like, it's very shaky, it's very slow, right? And then they go in short and then they get stopped out, which is really hard, right? The secret to short selling is to identify a seller. Let me tell you guys a story, okay? And hopefully this illustrates it, okay? When we were on the trade desk back in the day, right? As soon as somebody had a big sell order, right? At another brokerage firm, they'd call us, right? Because we all went drinking together. We were buddies, right? We did this for each other. So I'd be at a brokerage firm and you know, there was another brokerage firm where there was a trader. We used to call him the head because he had a big head. And he'd call up and he'd go, "Hey, I got a 3 million share sellout on this stock," right? And say the stock was $2 or $3. Some client had bought a bunch of stock, hadn't paid for it, which happens, right? Back in the old days. So you knew that there was going to be a big seller. So you go short 10, 20,000 shares. So if the stock's $4, you go and short 10, 20,000 shares at $4, right? And then he's going to go sell because he's got the order, right? He's got the order in hand, and he'll go knock that stock from 4 down to 3 or whatever, and you cover, right? Because you've identified that there's a seller. Do you guys understand that? That's how the world used to work. So how do you identify there's a seller now? You look at the top of those candles. Right? Only when you identify a seller should you take a short. How do you identify a seller? Look at the tops of these candles. That's where the sellers are initiating. That's where the sellers are competing. So if I wanted to short this, right, I would sit there now, I'd go, okay, let me do it on the micro, right? So I short 42 and a half, 42 and a quarter, 42, right? And I go and I put my stop at say 43 and 3/4, right? So I'm short, where am I short? That's not the greatest fill. So I screwed up on the fill. I'm short at 42. I got a sell order at 42 half and a sell order at 42 and 3/4. Now, as soon as I'm short, I'm going to go put in a bid at 41 and see if I can get a fill. I'm going to sacrifice one of my contracts, right? And that's called a lookout bid. Now, I'm watching that chart and see how the bottom of those candles stop right there? I know there's buyers under there. So those buyers need to see a big sell order to drop their buy order. If they do, my 41 bid gets covered. If they don't, right, I'm in trouble. Right? And I'll short another couple. I'll short one at 42 half and 42 and 3/4, right? But I'll have my stops just above there. Because if those sellers disappear, right, I need to have my risk protected. Also, I know there's a short position here at 40. So that's why I'm going to bid 41. This is tactical trading. Now, I know there's not a lot of meat on the bone, but I'm checking this out to see whether or not I'm seeing the market correctly. See how we stopped right there? Boom, 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 boom. I don't want to go long there. How do you get filled at a bad price? Sometimes, Vox, you just screw up, right? This is my first trade of the day, so I'm not really with it. And I was talking and I didn't have my DOM up. So how do you prevent getting filled at a bad price? Sometimes that's just the way it's going to happen because of the order flow. Other times you might be screwing around. You got to be focused, brother. You got to be focused, 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 focused. Okay? Right? So now if I'm short a couple at 42.50 and it's trading 43, if I start losing that seller, I got to start thinking, okay, this might not work. Look, right? So I start taking them back, right? Start cutting contracts. If you get stopped out, you get stopped out. That's life. Right? I know that there are sellers here. Right? That's a business expense. Right? See how the offer is moving higher and I'm stopped out. Right? I did it with micros, so I didn't go full tilt with the mini. So you lose 20 or 30 bucks. That's a business expense. Now you know that there's a bid at 41. Right? Now it could drop down and break that 41 bid right after I covered. Right? That is frustrating. But that's business. Right? That is business. Right? Had I been a little bit more patient, right, I would have had my stop up here at 45 and let it work a little bit more. Right? And of course, hindsight's always 20/20, right? After the fact, it's easy to say I should have done that. At the time, I didn't want to take that much risk. Right? See, now the trade, let's see where the bid is. Distribution is hard to trade, especially on the short side, because when you're shorting distribution, right, you know that there are bids here, you know that there are offers here, so you got to get perfect trade position in that little rotation. Make sense? So you could see the. Do you see how the bid moved up from here? You see how it moved up from here to here? Tiny little details. So Ian, in this instance, when we stopped at that 69.45, there was some strength in that untested point of control. There was supply there, and that supply stepped in and started to sell. So that's a good observation. Now, there's not a lot of meat on the bone, long or short, at this particular time in this trade, right? Which is good stuff. Oh. So folks who are in my one-on-one coaching, I'm finally better. I apologize for the last 2 weeks not being able to do as many sessions. So we're back on schedule. Reach out. Let me know what your schedules are. It's pretty amazing when the market hits something to the tick, eh? And it's these markets are so precise. The algos and the electronic execution, the people who program this stuff, I call them the 0 and 1 mafia. They've really, really made our life so much better. A lot of old traders hate algorithms and electronic trading. I love them because it allows us to use way better, like smaller stops, tighter stops. What it does for us is it reduces the cost of us doing business if we know where to intelligently put our stops, right? So we're not relying on a dollar amount for a stop. We are actually relying on the business to tell us where the stop should be. What a concept, right? Because all these people are like, oh, 1R, 2R, 3R. You know, I don't care how many R's you have, but if your stop's in the wrong place, if your trade's in the wrong place, who cares what your risk reward is? Because you're not doing proper business, right? Doesn't matter what your risk reward is, right? If you're taking the trade at the wrong time in the wrong place, you're still going to lose money, right? Here, you know, right? For example, if you're short, your stop should be here. If you're long, your stop should be here, right? And if the candles are going back and forth in a 1 point, 2 point rotation, that means don't take a trade because that's not for you. Does that make sense? So it's simple. 1, 2, 3. If those conditions are not met for you to put money at risk, why would you put money at risk? Right? It just makes no sense at all. Right? Your trades have to make sense. Right? Your trades have to make sense. And if you don't understand why your trade should make sense, reach out to me. Come into our room. You know, come into our room and give it a shot. I promise you, you'll learn more in a month than you will in 10 years anywhere else. All you got to do is pay attention. You know, I was educated in a place where you can't be wrong, where you can't blow up accounts. So how do you do that, right? Yeah, definitely. Steve's got a great price right now. You know, he's always running specials to bring people in the room. You will also get our AI, which gives you, and I've tested it. You want AI that's actually useful and helpful and is derived and has information from real traders, not like ChatGPT where they go out and they sweep the internet like a vacuum cleaner and you get all sorts of nonsense, right? See you, Jerry. Have a good one. Yeah, we have a lot of videos, and then I have 400 videos on YouTube. Um, we're always trying to educate. Last week I did a seminar on how to build positions. Um, this week on Wednesday we'll have an execution lab where we come in and talk about nothing but execution. Excuse me. So everything we do is to get you profitable. Look at that. Look at that. See how you get that big green candle? Well, it's big compared to the other ones. See, enough people short it here, and then boom, they run that stop that creates buying, right? I hate shorting distribution, right? Especially once there's two obvious short positions in the market and a bunch of subtle ones that you can't see unless you know where to look, right? So I took that test short here. Imagine if I was still short, right? And everyone's done this, right? If I was short 41 and a half, now it's trading at 47. If I added to it here I'm starting to feel the pain, right? And I've done that. Everyone's done that. Everyone's shorted, added, ouch, right? Everyone's done it. If you haven't shorted in the hole, you're lying. Right? If you say, "Oh, I've never been trapped short," you're lying. I know that you're not a real trader. If you've never been trapped long, I know you're lying. Oh, I've never been trapped. Oh, okay. Well, okay. You've never traded, right? We all go through the same spanking machine, right? So, take it from somebody who's been through the spanking machine a bunch of times, not only in trading, but also doing deals, right? Look how thin it is. Look how little volume it took to move the market from 45 to 49. There is nothing there. There's 100 contracts here, 100 here, and 100 here, right? Once the inventory is secured, it's so easy to move price up because there's no competition and all the sellers just raise price at the same time. And it happens over and over and over and over and over again. Oh, the levels are working. So now, right, we're going to have a new half-hour bar opening in 3 minutes, okay? So when we do, we'll probably have another short position from 43 up. Now, why is that, ladies and gentlemen? And you don't need market profile to do this, but if you have a candle chart, a half-hour candle, where this half-hour candle took the top of that one, anyone who had their stop there they got blown out, right? So they had that forced buying. So when the market comes back down, you can look to that area for bids, right? So another almost 3 minutes here. We'll see. We're going to have another set of single prints, right? And single prints to the upside are short positions. Single prints to the downside are trapped longs, right? Very important market profile structural little clues. And once again, anybody who shorted in that gap, anyone who's short from 69.23, right? Because everybody was expecting tariffs, government shutdown. It seems like every weekend they put out a bunch of bad news to force liquidations, right? The market gaps, and then we fill that gap that day or the next day. Do you notice that the gap ups never get filled? Do you guys notice that when the market gaps up, they take months to fill those gaps, sometimes years. We have gaps from COVID that still haven't been filled, right? But do you notice that when we gap down, we fill those lower gaps? When we gap down, we fill those gaps in a day or two. What does that mean? What is the practical information from that? The practical information from that is that, listen, this is a market that has limited supply. So when it goes on sale, it brings in buying, right? And it creates short positions, right? You know, we could go back and look at, I don't know if we can see on these market profile charts. Let me just get rid of. You know, we have gaps. Where's that other gap? I might have to go back in time a little bit. But we have, when the market gaps up, it doesn't fill those gaps for months sometimes. You know, there was a gap and it took so long to fill it, right? Then another gap up, then the fill. But when we gap down, it's amazing. You get a gap down and then you get a gap fill right away, right? It happens over and over and over again. The more people who short a market, the higher it goes in a market that has limited supply. People don't tell you that. They never tell us that. Okay, so we got another short position here. Right, so there's a short position here, and there's a short position underneath us. I should put the labels on. Right, and then there's the initial one is down here. And if you don't have market profile, you just use a half-hour candle chart. Okay? That is it for me today, my friends. Have a wonderful, wonderful trading day. We will see you at 9 o'clock. Thank you for being with me. Appreciate you all. Come visit us at the Trading Syndicate. We'll teach you how to make some money and enjoy your life instead of being in this struggle. Right? Now, when the market gets tired, when the people get tired of buying up here, they're going to put it on sale and fill these short positions. But if enough people come in, why would you lower price? Right? Always think like that. Right? Use the noodle. Thanks, everyone. We'll see you in a few hours. Stay safe out there. And for my friends in the Midwest, I hope you're staying warm and you have power. Bye for now. Reach out if you need me. Thanks, everyone.